G'day guys, welcome back. In this video, we are going to talk about another asset management company called Platinum Asset Management Limited. It has a ticker code PTM, and this asset management company are famous because it's founded by K. Nielsen, and some people refer him as the Australian Warren Buffett. However, if we look at the share price for the past 5 years, trading at $2.60 on February 4th, 2022, it has reached its 5-year low level at $1.5 billion market capitalization. And it seems like the market has punished Platinum Asset Management, but the investment performance is actually not bad. For example, their biggest fund, the International Fund, it has a return since inception of 12%. And a 10-year return of 10% per year. Platinum Asset Management also employed the long-short active management style, and because of that, they charge a high management fee, about 1.4% per year. And last time we checked, they also hold short position on ARK investment ETF and also Tesla. So we'll see how it will perform in the annual report later on. It should be interesting. Let's have a look at the 14-year review of the share price of Platinum Asset Management since its IPO. It has reached its all-time high around January 2015, about $8.70, and I see a strong correlation with the fund under management. And what I did is that I go through all of the annual reports and I record the closing fund under management and I list them out on the chart below. Just looking at it quickly, you see some correlation there, right? For example, in 2009, post the GFC, it has reached its lowest level of fund under management, about $14 billion. And as of 2022, according to the December 2021 update, they reported a fund under management about 22 billion. That's interesting because it's not a big difference to 2020 level where it was in the COVID pandemic situation. Then how come the share price is lower than its 2020 level? And by the way, the nature of asset management business such as Platinum, Pendle, or Magellan Financial Group, MFG, the bigger fund under management, the higher their revenue is, the bigger profit after tax. That is clearly shown in 2015. They reached their highest fund under management, over $26 billion. But again, it's not as big as Magellan that managed $100 billion. So the next chart here, I look at the earning per share and the dividend per share for the past 14 years. And I believe the reason of the share price keep plummeting is also due to the dividend per share being less given to the investor, and therefore the investor is not happy about it. And as you can see, from 2015 to 2021, the dividend per share has been decreasing at a steady rate. Another interesting thing as well is that the earning per share in financial year 2021 is higher than the previous 2 years, and yet they deliver a lower dividend. And as always, I encourage people to understand the business, read the annual report, and make a judgment from that. And I'm just gonna give you a head start here by getting the ratio between profit and the fund under management, and also the revenue to fund under management. The revenue to fund under management ratio is pretty much the management fee they charge us, right? And for the past 14 years, the average is 1.4%. And the profit is 0.8% because the 0.6% is used to pay for expenses, the directors, the fee, X fees, tax, and so on. Out of, say, $22 billion fund under management, you get about 1.4% revenue, or $308 million revenue, and profit after tax about $176 million. This is just an average. Doesn't always work like that, because if you can see on 2008 to 2010, just around the GFC times, they charged even as high as 1.9%. So it could change in the future, and that's up to your risk and return judgment. In order to approach whether $2.60 a buy or not, obviously we need to ask ourselves, is the valuation reasonable? Is $2.60 a reasonable share price? And this is what I did. It really depends on the size of the fund that Platinum Asset Management manage. So what I did, I calculate the FUM, say it is $22 to $14 billion, and I have got the range that profit after tax ratio is about 0.6 to 0.8%, given that it's possible that they may have some expenses too high and so on. And I get a range of share price that is reasonable based on fund under management. But that also comes with a lot of assumption. And remember, this video is not an invitation for you to buy or sell, but to really understand Platinum Asset Management a little bit more. So according to my calculation, based of average 14-year average price to earning ratio about 13, the reasonable share price at fund under management of $22 billion is $3 to $3.90. But what is interesting is that Pendle Group and Magellan Financial Group also going through a similar bearish view. The share price has been decreasing over the past couple of months, which I think is because of the inflationary period that we have right now, and investors are worried what if the amazing gains they obtained from last year, the market was going up about 25 to 28%. What if it's all gone just because the Reserve Bank increased the interest rate? Because ultimately it will reduce asset prices and your fund performance will not perform as great, isn't it? And that factor, coupled with the consistent decline of dividend per share that Platinum given since 2015, resulted in $2.60 per share. But again, if Platinum can go through this next 2-3 years and still outperform, they will do well. Because out of the three operations, Magellan, Pendle, and Platinum is the one that is the most expensive. They charge overall, on average, 1.4% management fee, whereas Magellan and Pendle charges about 0.6%. So maybe the investor will be more inclined to invest with Magellan and Pendle Group just because the management fee is lower and they can still deliver the return that they're expecting for. I hope you find this video useful, and thank you.